Opinions of the staff, management, or ownership of this station. It's time to get on the right path with Right Path Real Estate Radio with Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today.
Welcome to the show.
Get ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mics.
Welcome to the show. Welcome to the show. Jason Bible, Right Path Real Estate. We help families achieve financial independence through real estate. That's what we do on this show. It's real simple. Financial independence for your family through real estate. We teach the 4 different ways to make money in real estate, 2 of which are income producing, 2 of which are wealth building. That's the whole real estate game in a nutshell. It's that simple. I will tell you this, folks. Real estate, when you first get in, it seems intimidating. But here's what I'll tell you. It is painfully simple. It's so much easier than investing in stocks and bonds and mutual funds and index funds and, different companies and all. It's so much easier than that. There are no investments that you will make in your entire life that you know more about than the single family house that you live in. You know your neighborhood better than any investment you've ever made. That includes those of you who work 60 hours a week in the investing business. You know that house, you know that neighborhood that you live in better than any other investment. And what makes it an investment? Not necessarily the house you live in, but a house in your neighborhood that produces cash flow. That's what we teach. We train people, families, how to build wealth one house at a time. That's what we teach. That's what we train. That's what we talk about every single day. It's what we meet with our members about every week. It's what we have thousands of hours of training on our website. It's what all the emails that we send out. It's the case studies that we present of our members creating wealth and a legacy for their families. That's what we do. Here's what you have to do. You must have a goal. We'll help you define that goal. But it's one of the biggest mistakes I see in real estate, and not just in real estate, in business. How can you reasonably expect to create financial independence, to create wealth, to create a legacy without ever coming up or determining what your goal is? I'll give you a great example of this. You're going to college. Maybe you're sending one of your kids, son, daughter, grandkids, off to college. Before you send them off to college and write that check, do you have a discussion about what they're going to do? Or do you just send them with a blank check to college? No. You sit down with little Susie, little Johnny. What do you want to be when you grow up? I want to be a doctor. I want to be a nurse. I want to be great. What's your plan? Now, the college or university is going to help you build that plan. That's what we do here at Right Path. We help you with that plan. But you got to have some idea of what you want to build. A lot of the folks that listen to this radio station, this radio show, have got an idea of what it is that they want to be when they grow up. But it's got to be specific. This is I'm not even kidding, guys. This is one of the major fail points for businesses and investors. What is it I'm trying to accomplish? Could you imagine? We got a lot of oil and gas people here in Houston. We got a lot of rocket scientists down there in the southeast side of town. We've got a lot of project managers, a lot of business owners. Could you imagine trying to build a new product, trying to build a new rig, trying to build a new downstream, let's say, petrochem plant without a plan? I want, buy, win. That is so powerful. I want, buy, win. We have this little saying in our office, and we got it from Jim Rohn. And it's until. What does that mean? It means we're going to do everything in our power to meet this goal. And we're going to do it until we reach our goal. Building wealth with real estate is really simple. Now, does it take a little bit of hard work? Absolutely. However, it's pretty easy work. And why do I say it's easy work? If you guys are watching our Facebook page, you'll see our Right Path image. We've got our logo in a forest with a path that goes down that trail. And here's why it's easy. We've already blazed the trail. The trail's there. The map is already created. My wife and I got to spend some time at a state park this weekend. We walked down the trail. Now, was the trail easy? I mean, was it simple? I mean, we still sweat. It was still 100 degrees outside. But we had a little trail map. In fact, the cool thing is we were at Blanco State Park, which isn't real big if you guys are familiar with state parks in Texas. And they sell a bandana with the state park map on it. I'm like, that is so cool. You check into the state park, you buy a bandana map, and you read the map. Do we want to watch birds today? Do we want to go jump in the river? What is it we want to do today? What's our goal? What are we going to accomplish today to meet our goals when out camping? In fact, you know what's amazing? When you get to a state park, you just don't get to camp anywhere, right? You can't just pull up, side of the road. All right, we're going to camp here. That's not how it works. You roll up, pay a small fee. Which campsite, Mr. Park Ranger? Oh, you're going to be at campsite 22. Great. We got a little RV now. Pull a little trailer. Driving to my Tacoma. Driving over. Back that trailer in. I'm getting better at that. I have no empirical data, but I'll tell you this. It's harder to back in a trailer with a short tongue versus a longer one. I swear it is. The trailer is shorter than my truck. So it whips back and forth real quick. Anyways, I can't park anywhere on my campsite. I have to park in a designated spot. So I park in that designated spot. Then I hook up the electrical and the water and all that other stuff. And now we're camping. Real estate's no different. You want to retire in the next 5 years. Great. How do we do that? Well, first let's get you in the club. There's a certain place based off your goals and resources that you need to park. Some of you will be able to start right out of the gate and buying rental properties. That's our biggest push. For wealth building, there are two great things that build wealth. Rental properties and lending. Two great ways to build your wealth. However, some of y'all are starting with a little less in resources. So we need to build up some income. And really, when we talk about income, what we're really doing is building a war chest of capital that we can invest. That's really what's happening there. Some of y'all have high-paying jobs that works out really well because you can just take your earnings, your W-2 earnings, and deploy that against real estate. Some of y'all are going to have to wholesale and flip some properties. Well, what does that look like? You buy a house, you fix it up, you turn around and sell it. You make $20,000, $30,000, $40,000, $50,000. You then take that capital and put it into some rental properties. So depending on your goals, depending on your resources, it's going to dictate where you're going to start on the trail. Some of y'all get to park your RVs a little bit closer to the trail than others. Some of y'all are going to be tent camping and it's 100 degrees outside. Some of you guys are going to be sitting in a beautiful $1 million Class A bus ready to start the trail. However, what's amazing is, this is the part I find so fascinating. It doesn't matter where you start on the trail. You're all going to the same place. You really are. I've seen it in our own business. I've seen it in our members' business. You all end up in the same place.
1 minute.
And it's building wealth. And that's what we train, and that's what we network about, and that's why we build these networks of other real estate investors, IRA companies, and contractors, and vendors, and all that other stuff. We're all headed to the same place. I honestly believe that you will be more successful if you are around a group of people who are going to help you get to that same place. It's so much easier to do this as a team than it is by yourself. We get back from break. We're going to talk more about that. It's Jason Bible, Right Path Real Estate.
Mic's off.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary pier work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before every repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Did you know that there are over $24 trillion
All right, Jason, you got 2 minutes.
retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can.
Morning, guys.
Quest IRA is based locally here in Houston, Texas.
Oops.
At Quest IRA, we offer retirement accounts that can be used to invest in real estate, promissory notes,
Morning, Jan.
private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly
Oh
educational
my gosh, when I don't check my
classes, and free
Facebook for a day or
consultations with
two,
an IRA
it's
specialist.
crazy.
For more information, visit our website
magic
at
of thinking, what is this we got
questira.com
here,
or
Ollie?
call us at 1-855-FUN-IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees,
30
ranging from
seconds.
lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Got a buddy of mine on Facebook. He's also a member of our club, and he just posted, what was this, the 3rd? August the 3rd. And about to send his son to college. I'm guessing this kid's 16 maybe, 17. And he bought his first rental property. He's going to make about $300 a month in cash flow. I got tagged in the post. Hey, Jason, all those lessons you're teaching are paying off to the next generation. So they're going to try and pick up enough properties in cash flow to be able to pay for college, or at least a significant portion of it. How cool is that? How cool is that? End up with, let's say, 10 properties making $3,000 a month. And granted, that won't completely pay for college, depending on where they go. I mean, he can end up getting a scholarship too, but it'll certainly reduce the expense of college. And then here's the great thing. When his son graduates, they still got the 10 properties. It's awesome. They got the 10 houses, paying $3,000 a month. How would you imagine this? Especially those of y'all who have kids. Imagine this. Imagine that you buy over the next, let's say my oldest is 11. Imagine you've got an 11-year-old at home. You've got 7 years before they go to college. Imagine if you buy 10 houses in 7 years, making $300 a month in cash flow. They're able to reduce their annual college expenses by $36,000 a year. Even if school's only $50,000 a year, it gives them a $14,000 buffer. So now we got to come up with $14,000 a year instead of $50,000. And here's the amazing thing. When that kiddo graduates college, you can do the same thing with one of their siblings, or if that's the last kid to go to college, you just hold on to the real estate. I read this absolutely depressing story, and I'm going to share some tidbits from here. It's in the New York Times. Too little, too late. Bankruptcy booms among older Americans. Let me read that again. Too little, too late. Bankruptcy booms among older Americans. The gist of the article is there is a massive increase in the number of folks, the number of retirees 70 plus years of age that are filing for bankruptcy. I'm going to say that again. We are rapidly increasing the number of retirees that are filing for bankruptcy. It's absolutely insane. And when you really get down to it, there are two things that are causing bankruptcy in retirement. Healthcare expenses, not enough income. That's it. It's two real simple problems. Healthcare and not enough income. You guys are familiar with the rule of 25. Take whatever your annual expenses are, multiply them by 25. That's what you need to retire. That's it. It's that simple. You spend $100,000 a year, you need $2.5 million to retire. Here's the problem. Whenever I mention that number, people who are planning for retirement, I can see them especially if it's an audience. I could see in the audience the ones that are real serious about retirement because they start doing the math in their head and they go, yeah, it's about right. And then I could see their brain working and they go, well, I've only got $2 million and it took 35 years to save up that $2 million. I'm $500,000 short. I'm almost there. But then I bring up healthcare expenses. You will be out of pocket somewhere between $250,000 and $500,000 in healthcare costs during your retirement. That's if you're retiring today. That's not 10 years from now, 15 years from now. Healthcare is growing at an average rate of about 7 to 10% of inflation. So what's amazing is when I talk to people who are like, oh yeah, I got all this money in the stock market and I'm making 10%. Why would I go into real estate? And I tell them, well, that 10% might just keep up with healthcare inflation, which is going to be one of your largest costs in retirement. We haven't even started talking about legacy. We're just talking about people trying to survive retirement. Can't build a legacy if you're just trying to survive. So how is real estate different? Simple. It cash flows. Number one, it cash flows. You will make more money on appreciation. That's number two. But let's talk about the cash flow first. You invest in a house in your neighborhood that produces cash. It produces enough cash to provide for your family. Right then and there, you have reached financial independence. That's it. I mean, you're retired. If you really want to retire, then you can. Most people don't, but you now can retire. You've got enough real estate, cash-producing real estate, that you can retire. It's that simple. These retirees do not. They have a dip in income. They don't get their adjustments to Social Security. There's another stat in there that says that healthcare expenses are 40 to 70% of their Social Security check. That's insane. They just don't make enough money. If you listen to everybody else on this, in the financial industry, all these other guys out there, they will tell you save, 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 invest, invest, invest. We tell you the same thing, save and invest, save and invest. Here's the reality. You will not be able to save enough. You just won't. The problem is your rate of return is too small. That 7, 8, 9, 10% rate of return over the long haul, which is really what the market returns, assuming there's not a really brutal year, 5 years before you retire. That 7 to 10% a year is not enough. It's just not. You need the cash flow. You need assets that appreciate, that produce cash. And the only assets I see that at a reasonable rate of return is real estate. I'll have to look, but I think dividend yields are less than 2% now. So you're getting a 2% dividend? Heck, we're making 10, 15, 20% on cash flow. That's the difference. When you really start getting into the numbers, you can set up your spreadsheet, simple interest calculator, actually compound interest calculator, 7%. If I put, 50% of my income into savings, I might be able to retire in 15 years. Those are the numbers, by the way. The reality is that your return is not high enough. Now, you can get into some really crazy speculative investments. But the reality is that you don't know much about those. Even the guys that are selling them don't know a whole lot about them. I challenge you with this. There is not a single asset you know more than a single family house in your neighborhood. I guarantee you know that neighborhood better than any of your other investments. So why not buy a couple of houses a year in the neighborhood that you know really well that produce cash? And by the time you're ready to stop working, or if you want to stop working sooner, your bills are paid just based off the cash flow. You don't have to buy 100 houses. You don't have to buy a 100-door apartment complex. Heck, there are only 7 or 8 of those a month that get sold in Houston, Texas. There are 10,000 houses that get sold in this market in a single month. You know, it's so funny. Somebody sent me an article, and I've been watching this for about a year now. The Vancouver real estate market is in an absolute free fall. I think year over year it's collapsed 30%. That's insane. But when we really start digging into the numbers, they only sell like 800 houses a month. We sell 10,000. Our market is enormous. You don't need 10,000 houses to retire. You don't need 100 apartment doors.
2 minutes.
I was chatting with a friend of mine who's a multifamily guy. He's lucky to get $50 in cash flow per door per month. How many doors do you need to retire? You need 200, 300, 400 doors? If you need $10,000 a month in cash flow, how many houses do you need? About 30 and some change. There are 10,000 properties that get sold in Houston on and off MLS. Actually, it's more than that. This is the first month that Houston cracked 10,000 on MLS. So we think there's about 10 to 15,000 houses a month that get sold on and off MLS, meaning private and public. And what most Americans need are like 30 or 40 houses. That's it. They don't even need that much if they're buying, or that many if they're paying in cash. Heck, if you're paying in cash, you don't need $2.5 million to retire. You need $100,000 a year in income. You need about 1.1, 1.2 mil. That'll get you $10,000 a month in income on single-family real estate if you paid all cash. You literally need 40% less, or 40% of the total. We get back from the break, we're going to talk more about financial independence, how Right Path can help you out with that. It's Jason Bible, Right Path Real Estate.
Mic's off.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give NextGen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. We're here for you. Are you a rehabber, wholesaler, buy and hold, or flipper? Bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Are you looking for an investor-friendly general contractor for your investment property?
Yes, I am.
Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it gets done fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906.
All right, 10 seconds.
Or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. On our website, rightpathrealestate.com, I've got a infamous article, Retirement is Poverty. And here's an article, The Signs of Potential Trouble. Vanishing pensions, soaring medical expenses, inadequate savings have been building for years. Now, new research sheds light on the scope of the problem. The rate of people 65 and older filing for bankruptcy is 3 times what it was in 1991, the study found. And the same group accounts for a far greater share of all filers. So there's a way to lie with statistics. Actually, you see it in the political landscape all the time. So I can't watch like regular news anymore. They'll say something like, the default rate has quadrupled since 2003. And then you look and you go, oh, well, because there was virtually, starting in 2003, there was virtually no defaults, right? I mean, what I like to know is what's the rate of growth. Meaning, if you're looking at any statistics, someone says, well, something has grown 40%. Okay, well, that's good to know. It's grown 40% over this many years. So that then you can divide that by 40%. You know what the rate is per year. But then I also like to know what's the relative number as it relates to the whole. In other words, this increase, was it on a very small percentage of the overall group, or was it a significantly larger portion of the group? And they hit the nail on the head right here, and this is a great statement. The rate of people 65 and older filing for bankruptcy is 3 times what it was in 1991. Okay, so it's 3 times higher as compared to 1991. And then you're thinking, okay, well, I mean, how many people 65 and older file for bankruptcy? I mean, it can't be that many, right? And then you get to the bottom sentence here where it says, and the same group accounts for a far greater share of all filers, meaning it's the largest portion of all people filing for bankruptcy. That's a great stat to know. That's how you know it's a legit stat. 1991 to now increase in 300%. That's 3x. 3 times. And it's the largest share of all people that file bankruptcy. Now we got a good stat, meaning this is a real problem. But I want to go back to the first sentence in this paragraph because this is what's really important for a lot of people that are at or near retirement. And that is vanishing pensions, soaring medical expenses, inadequate savings. Let's take number 1, vanishing pensions. A lot of people think that they got a pension that's guaranteed. That's not true. That is not true. Talk to the guys in Dallas right now, the police officers in Dallas. That pension system it's something else, guys. Here's all these police officers that thought, yeah, I'm going to be set up with this pension for life. And that does not look to be the case. Look at the pension here in Houston for firefighters and police. A lot of guys around the around the water cooler and at happy hours and at kids' birthday parties and at all that kind of stuff. They're having a lot of questions about the drop. A lot of these guys went into the drop and they're wondering, hey, is this money really going to be here or not? I don't know. A lot of teachers, CalPERS, which is the California retirement system for teachers, is not on great financial grounds. And it's real simple why. Much like most people's retirement, I don't blame the people that manage those pension funds. I don't necessarily blame them. Because these pension funds are acting like a lot of individuals in retirement. They assumed 7, 8, 9, 10% rates of return year over year over year over year. They also assumed that they would have the income to offset any down years, meaning that there would be more people paying into the system than retirees are taking out. By the way, both of those flaws, both of those issues were not a surprise. People who study pension plans have been screaming from the rooftops that these pension plans are not going to be solvent long term. Look at Social Security as a great example. So I'll tell you, one of the big tenets we have in RightPath is taking control. When you hand off your retirement to someone else, you have lost control of one of the most important aspects of your life. That is exactly what's happened to these people. They thought they'd have a pension. They thought Medicare and Medicaid would take care of them in retirement. And they thought they'd have enough savings. So the backstop was always savings. And the backstop was always Medicare. And the backstop was always, well, I've got this great pension from my company. All 3 of those have failed. I don't fault these folks. However, what I understand is the old paradigm of someone else taking care of you in retirement is not going to work. The government has failed in Social Security. State and local governments and companies are failing pension plans. Which you could also argue that it's failed people who have saved. I can remember a million years ago, at least it feels like a million years ago, when you would cash out, retire, sell the farm, if you will, and you could put it into a CD and live off the CD or a money market account and live off the interest from a money market account. You haven't been able to do that in like 30 years. So the reality is, what are you going to do? If you're relying on the government, or you're relying on the company, or you're relying on the stock market for your retirement, how much control do you have over those 3 avenues? You've got none. However, what I can tell you is, when I sit there in my neighborhood and I've got a house that cash flows, and the neighborhood's been great for 40 years or 20 years, I know that that's going to be a great investment for us. My wife today is closing on her first rental property. She'll cash flow $250, $300 a month. I think we're going to be all in for about $100,000, buying it for $80, $25,000 rehab, in for about $105. The house today is worth about $100 I don't know. There's a debate here. It's a little bit larger house. Could be worth $145. Could be worth $160. Could be worth $140. I mean, somewhere in there. Let's say it's $150. There's $45,000 in equity. Instant equity. It's like buying Apple at a 20% discount. How many of y'all right now would go out and buy Apple stock if somebody could sell it to you at a 20% discount? And oh, by the way, the dividend yield is 10%. So go buy $100,000 of Apple stock for $80,000, and they're going to pay you 10% dividend on your $100,000. You're going to make $10,000 a year, right? Because it's $100,000. The ARV, if you will, the value of the Apple stock's $100,000. You're going to make $10,000 there a year, and you're going to pick up 20% equity after it's all said and done. You're going to be $80,000 into a $100,000 investment that brings you $10,000 a year in cash. Who would not do that? The answer is everyone would do it. It wouldn't even be a discussion. How many people bought Facebook when it dropped 20% 2 weeks ago? I ought to pull that up. We probably see the volume. That's what we're doing in real estate.
2 minutes.
We're buying real estate at today's prices for 20% off, and it's producing cash. And the question is, I get all the time, Jason, how do you build wealth with real estate? And my reply is, how do you not? You're buying a $100,000 house, fixed up, beautiful, ready to go for $80,000. You got $20,000 in equity against your 80. Then you've got the cash flow. Couple $100 a month in cash flow. Let's call it $300 a month. $3,600 a year. Oh, and by the way, forgot to tell you, it's appreciating at 10% a year, which means it's going to double in value in 7.2 years. That $100,000 house is going to be a $200,000 house. And if you don't believe me, go into a neighborhood where the houses are valued at less than $250,000 and see what those things were selling for 5 and 10 years ago. In fact, if y'all are listening to this radio show right now, if you've moved in the last 10 or 15 years, I want you to go back to the neighborhood that you and your spouse bought a house in and see how much those houses are selling for. It will blow your mind. We get back from the break, we're going to talk more about how to build a legacy with real estate for you and your families. Jason Bible, Right Path Real Estate.
Mike's off.
Are small returns getting in the way of your retirement plans? Why settle for mediocre results? There's a better place to invest.
Morning, Joe.
The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825, or you can reach us online at foundationcheck.com.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract-to-close associate. Give me a call today at 713-579-3611, and let's talk about how we can help you on your next transaction. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes, binders, and the agency for that is Benchmark Insurance Group of Texas. The team at Benchmark understands the investor mindset. They know what you need and when you need it. It's there for you. Call Houston's leading real estate risk management experts, Benchmark Insurance Group of Texas, 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com.
Taxes. Just the sound of that
1
word
minute.
makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at andersonadvisors.com, and don't forget to tell us you heard about us at Right Path Real Estate.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
This is Business 1110.
Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Talking about retirement. Retirement's one of those things where people are like, well, I don't know. It's like a million years from now, and I'll worry about it when I get there, or 20 years before I get there. It's like, man, that's not the way to do it. Start doing some small things now. Buy a house or two. We just turned 40 this year. Wife's buying a house today. And by the time we retire, if we decide to retire at the age everybody else decides to retire in 25 years, which would be 65, this one house will be nearly paid for. I'm going to have 5 years left on the note. Now, that house, what will it be worth 25 years from now? Well, I mean, worst case scenario, houses appreciate 3% a year. I tell you, in Houston, Texas, and most of the nation, we're not building affordable houses anymore. I drove up to Blanco this weekend. Actually, this past week. I think we left Wednesday or Thursday. Got back Saturday, went to the beach Saturday. And we drove through all these different new, went up to the hill country, came back, went down to the coast, drove by a lot of brand new neighborhoods where new construction is occurring. There wasn't a single neighborhood that had houses being built for less than $200,000. Not a single one. And I can just about guarantee you, maybe I can't, but I'm just about pretty confident in this, that when it says the low 200s, those are for houses they were selling 3 years ago in the neighborhood. Yeah, there's nothing in the low 200s in these neighborhoods anymore. Once you add all the upgrades and the lot fees and all that other stuff, I bet they're 250, 260. There is no more affordable housing. A lot of people think that Warren Buffett built his wealth by buying stocks. That's not true.
2 minutes.
He built his wealth by buying things less than replacement cost with a good management team. That's it. That's how he built his wealth. And that's exactly what we do in Right Path. We're buying houses below what they cost to be built new. That's it. That's it. I told you guys it was simple. I think I just told everybody the secret in real estate. We're not building new homes. We're not building new mobile home parks. We're not building new storage facilities. Not building new apartments. It's crazy. Just buy them below replacement cost and rent them out. And here's what happens. Over the long term, those values continue to rise.
1 minute.
$100,000 house in the next 10, 15, 20 years could be worth $200,000. Make $100,000 just off buying one house. Rule of 25, you need $2.5 million to retire. There's two ways to do that. One is make $100,000 a year in cash flow from your rental properties, or simply buy enough real estate that they appreciate enough that when you sell them, you've got your $2.5 million.
30
seconds. What's amazing? You can do both. Cash flow and appreciation. Folks, this is how we build our legacy and wealth with real estate. Come on out to one of our free events. We've got one this Tuesday. Got another one Thursday. Go to rightpathrealestate.com. You can sign up there. We'd love to see you Tuesday night at 6:30 or noon on Thursday. This is Jason Bible, Right Path Real Estate. Thanks for listening.
All right, Jay, have a good one.
All right, thanks.
You've been listening to Right Path Real Estate Radio. Find Jason and Tom at